Good morning and welcome to your market reports. I'm going to talk about some really big stuff today. It's really big stuff on my market report, so hang in, stay tuned. It's Wednesday, April 25th, 2018, and to get started, let's start the charts right here. Okay, now listen guys, I'm kind of excited about this. What's going on? First off, first thing we're going to look at is the Dow Jones. She's down 162 points. Now, my target for this drop, I said that she'd make it up to 25,000. She didn't. She made it up, let me see, how high did she make it before she turned? Let's put it on the 1 month here. I made it up to 24,786. Let's put it on the 3 month, get a better look. No, try 6 months. Okay, 6 months. We'll pull it back in here. Okay, this peak right here, I expected it to go up to here, 25,000. It actually made it up to 24,786. Now, this drop that's happening right now, I expect it's going to bottom at 23,000. Okay? That's where I'm expecting this bottom to drop. So it's basically, it's charting and it's following the exact course I expect it to follow. I expect this to continue downwards right now. We're in this little downward spin, and I expect it to bottom at 23,000. It might have a little jig up before it drops down again. So I mean, tomorrow might be a little up day, or the next day might be a little up day, right? But then expect it to a little up day, like a little up day, maybe up and then down. It's going to go down 23,000 is what I'm expecting it to go down to, and then it's going to bounce again. It's going to start to recover again a little bit, back up and head toward 24,000. So then we'll be looking at like 23.3 or 23.4. What the stock market's basically doing is it's basically making lower lows and lower highs. Lower lows, lower highs, and it's jogging itself down like the way a man climbs down a set of stairs. You know what I mean? It's just a stair down, and then a stair down, and then a stair down. And of course it goes up each time before it jogs its way down. So this next jog down, 23,000 is my target. You can see it's just like the stairs. You can almost plot it. I mean, it's not that hard to calculate where it's going. 23,000. But now here's the thing. It's on its way down to 20,000. And 20,000 is going to be the most important. That's way down here. 20,000. But 20,000 is going to be the most important jog of all. That's my mark. 20,000. Remember 20,000. When it goes below 20,000, two things are going to happen. Two markets are going to change direction. And this is why it's so important to remember 20,000. And this is why this morning what I'm telling you right now is so important. Is when the stock market goes below 20,000, two very important things are going to happen. Two very important markets that we watch are going to change direction from each other. First off, Bitcoin and silver. They're both going to change direction. Silver's been going down and been being suppressed. When the stock market goes below 20,000, silver is going to break free. It's going to break free of the suppression. And when the stock market goes below 20,000, Bitcoin has been going up. And going up and going up forever. Bitcoin is going to lose it with the stock market. It's going to fall with the stock market when the stock market goes below 20,000. So you might ask yourself, well, when's the stock market going to go below 20,000? And I'm going to tell you right now. It's going to go below 20,000 when the bond on the US 10-year goes above 3.25%. So now you basically got a roadmap there for all three things. And this is the roadmap that I'm following. And I'm watching the stock market stair tread its way down like the man stepping downstairs, and I'm just waiting until it gets to 20,000 because that's the big marker. When it drops below 20,000, that's when fear is going to enter the market. Enormous fear. And you're going to find out that cryptocurrency is a speculative asset at that point. At this juncture, it's a speculative asset. And that's why they're going to sell. Now, okay, let's move on a little bit here, because we got a lot more to talk about. Silver price is nothing much to talk about here, nothing much to see here. It's fell back to its old range that it was for weeks. It's been following two ranges. One range is up around 1720, and the other range is down around 1640. It's in the 1640 slot, roughly. And so there's nothing to see here, folks, in silver. Silver's doing shitty. Excuse my French. Okay, so now let's take a look at Bitcoin. We got to increase the size of the chart here to see our Bitcoin charts. We're going to be at Bitstamp. She's fell back over the night. My target, I said $10,000 for Bitcoin. It made it to 97.55. Okay, which was a little bit short of my target. My target was 10,000. Right here, 97.55, and then it started to slump down last night. It fell back from 97.55. Now, it's got until the stock market gets to 20,000 before Bitcoin rolls over. And so, because it made it to $10,000, when the stock market starts to fall a little bit more than it's fell right now, when the stock market falls another 1,000 or another 1,500 in its next stair step down, people are actually going to come to Bitcoin because they see it as a safe haven asset, and people are going to buy in. And it's going to, because it's already made it to 10,000 more or less, 97.55, and I expected 10,000 as my target. It could actually make it to like 11,000. So I got to up my target a little bit higher. It could actually make it to 11,000. Even though this morning it's only at 9,014 as we speak, it could, before the stock market really goes below 20,000, it could make it to 11,000. Bitcoin could, you know. But then watch out, boys, because when that stock market goes below 20,000, you remember I told you what's going to happen. Bitcoin is going to fall big time. Big time fall, you know, but that's all stuff in the short term, because this stuff's coming fast. It's coming before the end of 2018, all of this stuff that's going to happen to the stock market and stuff. And I know I've predicted the stock market's going down to 12,000 before it's finally going to bottom out, you know, and it's on its way down to there. But what's gonna bottom the stock market out and reverse its direction is when the Fed reverses policy, and that's when the dollar's gonna die. So you basically got it all laid out for you this morning in my report this morning, in my market report this morning, except for what's gonna happen to cryptocurrencies. I haven't went into that after the Federal Reserve changes their monetary policies. After the stock market goes down to 12,000 and they change their monetary policies, the stock market's going to shoot up. It's going to shoot up like a bullet. But so is cryptocurrency then at that point, and so is gold and silver, and everything's going to shoot up in price, except the dollar's going to fall. The dollar's going to die. The dollar, it's all going to shoot up in price because the dollar is, and it's going to die. They're going to kill the dollar. This is what they're going to do. So let's move on to bonds and rates. Bonds and rates, the U.S. 10-year is on its way up today. She's past 3%, just exactly what I expected. I expected her to pass 3%. And now she's 3.015 and heading 3.012. The stock market today could react to this. It could continue down, but its slide, I predict, in the very short term, is going to be held up at 23,000. When the stock market gets 23,000, I think it's going to bounce a little bit, but it's not going to bounce that much, you know, really, because it's stair-stepping down, like I showed you. It's going to continue to stair-step down as this continues to climb. This is on its way toward 3.25. That's my target for it. And there it's just climbed another little notch higher again while we've been watching it. The U.S. 10-year. Let's take a closer look. at the U.S. 10-year. As we can see, let's get into the chart a little bit tighter to the chart so we can really see good here. And we're going to take a look at 5 days. 5 days, just up, 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 up. It's just busting through. And here's where it first busted through, right here. And you can see it fell back. It fell back for a while. But now it just smashed through it now. Just smashed through. Smashed through 3% now. And continue charting on our way back up again. We got to take a look here at, I forgot to take a look at cryptocurrency market capitalizations. But we're going to take a look right now. $391 billion. Bitcoin at 39.2%. And all of these coins, you know, they're all down today. Okay, so we're looking at who's down the most. Ethereum's down a lot, 11%. Bitcoin Cash is down a lot, 14% down. That's a lot. That's a lot. That's a lot. And Bitcoin Cash is really great. I mean, I am a fan of Bitcoin Cash. I think eventually Bitcoin Cash is very likely to become the #2 coin. Ethereum is probably going to be something like number 4 or number 5 eventually. Litecoin, I think, is going to be a #3 coin, your #3 coin. EOS is strong. I like EOS. Cardano, all these top coins like IOTA, I think they're all going to maintain strength. I think Monero is going to be a stronger coin than people think. And Dash, if they'll ever get their Evolution wallet finished and get that finished and get it out there, I don't know what stage of development there are. I should check into that on their Evolution wallet. But Dash is an awful nice coin. They're down in number 13 position right now. What are they? Dash, $469. They were 300 and something. How much did they fall? They fell 12%. So that's a good little fall, good little correction on Dash. Okay. But I'm looking at Bitcoin Cash right now, and I'm saying yummy. I'd love to have some of that, you know, really. Okay, so here's the thing. Let's move on to Sweet Light Crude oil futures, you know. Sweet Light Crude, and let's take a look at 5 days here. It's not really up that much today. It's marginally up. Let's take a look at 1 month. It's up over the month, but, you know, just in the last day or so, it's kind of not really going much of anywhere right this second. U.S. dollar index. Dollar's been up 91.10, you know, and the dollar is going to continue up until the stock market hits 12,000. So stock market hits the bottom. I figure the bottom's going to be around 12,000. It could be 14 or 15,000. It depends on when the Fed's going to relent. I'm thinking that the Fed is very hawkish right now. The Fed members that are in there right now are extremely hawkish, but they will bend. The market's going to bend them. They will bend. They will bend when the people out there are screaming at them to bend. They'll bend. At that point, when they bend, they're going to change monetary policy, and they're going to become dovish. They'll be forced to become dovish. The dollar's going to go up until then. But I'm almost expecting, I'm thinking to myself, you know, there's a few more points in the dollar before it gets to that point where they bend. Until the Fed bends, this dollar's going to continue to go up. But you got to understand, when they bend, the dollar's going to die. It's going to be the final thing, and the dollar's going to actually start its process of dying. That's when we're going to see the dollar go from the mid-90s down into the 80s, down into the 70s, down into the 60s. I mean, it's going to die. Seriously. Hyperinflation. It's going to die. The dollar's going to die. They're going to break the back of the dollar, and it's going to be no return for the dollar at that point. And that's why we're going to see silver and gold price take off. That's why we're going to see cryptocurrency is going to be the biggest benefactor of all of this. Gold and silver is going to be a huge benefactor of all of this too. And what's going to be the death is going to be the dollar. And if you're invested in dollars, if all you got your bank accounts and everything you got's invested in dollars, so it's at that turn when the stock market's going to continue sliding until she gets down to 12,000, 14. Depends on when the Fed relents. They might relent at 18,000. I'm not sure. They might give in. They might yield at 18,000. They might even yield at 20,000. They might, if they're smart. If they're smart, they'll yield at 20,000 when the stock market drops below 20,000 and there's no real big chaos yet. They'll yield. And they'll say, okay, we were wrong. We're going to reverse direction. We're not going to do this anymore, this quantitative tightening. We were wrong, and we're going to come in with a new policy of quantitative easing and everything else. Money, 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 and they'll turn and change directions. If they do that, say at the stock market at 20,000 or 22,000, they'll revert a crisis. And they won't have to do as much stimulus, right? But if they are really stupid, and they wait until the stock market gets way down. I mean, if they wait until the stock and they continue with this reverse quantitative easing, and they continue pushing it until the stock market is down almost on its knees. I mean, down to 12,000 or say now. I told you I'm predicting the stock market's going to go to 12,000. That's because I think that the Fed's really stupid. I think that they're going to maintain their position on quantitative tightening until the last minute, until the stock market's down on its knees, 12,000. Then I think they're going to turn it. If they do that, then the situation is going to be so much worse than if they relent earlier. See, because if you've been listening to me right now over the last few minutes as I've been talking, you'll realize that everything is down to the Fed, what the Fed's doing. This whole thing, I mean, we could have right now, if they didn't have the reverse quantitative easing programs, if they weren't tightening right now, if they had loose monetary policy, we could have 100,000 Dow right now. Everything could be good. Bitcoin could just go to the moon and keep on going up and up and up forever. Right now, cliff high, all of his predictions would be correct. It's the Federal Reserve that is making this different prediction from cliff high, that we're not going to have 100,000 Dow, and we're not going to have, because they are quantitative tightening. They're withdrawing liquidity from the system. And they're going to continue doing that until they create a crash. We're watching for when the Fed has to turn and has to stop with this. And they will have to stop with this because the market is going to force them to stop with this. And my bets is on when they're going to stop with this. I think that they're going to wait. And I could be wrong. I mean, the stock market might only drop another 1,000 points and the Fed might come out and say, okay, we've decided we're going to quit with this quantitative tightening. I don't think that's the way it's going to work out, though. I think they're going to hang in there, and they're going to bitterly hang in there while the stock market goes down lower and lower and lower, and they're going to realize that they have a failed policy, that they cannot sell their $4.5 trillion worth of bonds into the market without rolling the market over. They're going to realize that that's the case, because that's what put the market up, was the buying of those $4.5 trillion in U.S. Treasuries is what put the market up in the first place. If they remove that, what do you think is going to happen to the market? Think the market's going to stay up? What's it going to stay up on? That's what built the market. If you tear that away, the market's going to fall. I mean, that's a no-brainer. Okay, thank you guys for listening to this market report, and we'll catch you in the next market report. Bye-bye for now.